Good morning from our global headquarters in New York. I'm Danny Berger. Manish Krani is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Seizing the moment, Donald Trump's defiant display after an assassination attempt boost his odds in the election race. President Biden calls for unity. The Trump trade gains momentum, the dollar edges up, and Treasury slump as the curve steepens. And bank earnings continue with Goldman Sachs on deck after its peers fail to impress with their results. Well, America is waking up this morning to the shock of this weekend, the shock of a political violence event on Saturday in Pennsylvania. The question will be whether this acts as a cauterizing force for this American populace, as so frequently political violence has in the history of this country, or is this just the continuation and an increase in the divisiveness of this American populace? It is our job to check markets for you every single day here on Bloomberg, and today is no different, even though it might feel dispassionate in a moment like this where the political impact and loss of life is of the utmost importance. But the bottom line is clear. This increases the odds of a Trump presidency, and that's how this market is trading. Bonds this morning higher by 2 basis points for your 10-year yield, 4.2%. Briefly, you had the 30-year yield exceed the 2-year yield. Again, is that steepener trade with the concern over the deficit? We're going to be talking to Marko Papic in just a few minutes of BCA Research. Really looking forward to that. He has a lot to say on how bond markets will react and should react to a Trump presidency. Dollar, that also strengthening this morning. Some of that eases off. Euro versus the dollar, 109. For the majority of this, it had been a stronger dollar trade. That's according to Quantum Research, who says that it's good for the dollar. That is Trump's presidency, bad for every other asset. We back off of that this morning. Now, the rotationary flavor that we got last week is continuing this morning. S&P futures up 0.4%. But on the bottom of the screen in a moment, you'll see your Russell Small Cap Index. That is outperforming, up by more than 1%, 1.1% so far this morning. So it is a rotation. Along with the politics, the other events for us to watch out for this week. Goldman Sachs earnings today, as well as hearing from Powell later in the day, talking to David Rubenstein. But we start with our top story. Investors are ramping up bets this morning that former President Trump will win the election in November after an assassination attempt at a rally in Pennsylvania over the weekend. Here's a reaction from some of the voters.
Surprising. We think it will help him. I think it shows the difference between the two parties, and I think there's been enough animosity between the two, and it shows. But it seems to be more aggressive from the Democrats.
Completely shocking. I mean, there's no need for any violence anywhere. I mean, either side of the ticket, either ticket. I mean, it's horrible.
I feel pretty more compelled now than before. I was like 20-30 minutes away from here, and as soon as I heard the news, I had to get down here and be around like the like-minded supporters and see what happened.
While the initial announcement was shocking, I don't necessarily think it was a surprising event.
Joining us now to discuss what this means for the election cycle and more is Courtney Rosen of Bloomberg Government. Courtney, great to speak with you this morning. Thanks for getting up early for us. Look, as I mentioned at the start of this, historically, these kind of violent political events have acted as a force of moderation for populists. And I mean, we hear there who wants that unity. We heard from President Biden calling for unity. What is President Trump likely to be doing today?
We're expecting a similar message from President Trump, though we don't know if that's going to come from the rest of the Republican National Convention that has been around today or will be around today in Milwaukee. We're seeing also leadership of the Republican Party call for calm, call for unity, but some of those rank and file members have different views.
I mean, to that point, J.D. Vance and Tim Scott, both have been talked about for the VP pick, have basically said that Biden's rhetoric directly led to this weekend's events. You saw maybe even more extreme language from the likes of the further right people in the Republican Party. But again, as we hear that kind of language, what you hear from the Biden camp is they're suspending ads. What does this mean for campaigning? How does one campaign in the wake of this type of political violence?
The first thing the president will do today is appear in public. He will do an interview with Lester Holt of NBC this afternoon. And then the campaign is set to resume. He's going to Nevada tonight. He was supposed to go to Texas today. That's not happening, but the rest of the campaign events are still happening in Nevada over the next couple days. We're expecting at some point that the campaign will resume ads. The tone of the ads might change. But at this point, it's a pause in campaigning for today, but I would expect it to continue through the rest of the week as they need to counter the message from the Republican National Convention.
Courtney, the other big thing to come out of this, the other big question was, how could this happen? How could this happen? How could Secret Service allow this lapse of someone that was about 140 yards from the president, former president, rather? So what information are we still awaiting from law enforcement? What are we still expecting, and what do they have to answer for this morning?
The FBI is leading the investigation, is what President Biden told us yesterday. Now, I've traveled with presidents before President Biden to different events, and one of the things that always strikes me about President Trump's rallies is that they're generally open air, right? There's not in a closed space. For example, I've been with President Biden to speeches at community college last year where, it was inside of a building. It's a different environment for the Secret Service. So we should expect to hear from the FBI as they continue their investigation, and also Secret Service, who's in charge of protecting the president, and also former presidents and presidential nominees.
Courtney, thank you so much for that. That is Courtney Rosen of Bloomberg Government. Joining us now is Marko Papic, Chief Strategist at BCA Research. Marko, thank you so much for joining us this morning. We really appreciate it. And look, you introduced a framework to this market at your work at BCA about a decade ago that really has become the standard for trying to interpret geopolitics into this market. Being a student, again, of not just history, but of these markets too, can you take a step back for me, Marko? Can I just get your read on what this moment means, on how we should think about this in the historical sense of shock and change in America?
Yeah, well, I think many presidential campaigns are often defined by an individual moment. It's not really necessarily about the secular moment or the structural moment. It's that individual snapshot. And in 2024, that very much will likely be the photo of President Trump holding a fist high, bleeding from the ear with the American flag waving behind him. And I think that because of that, it is quite appropriate that the market is waking up to his quite robust probability of winning the presidency. And so we've seen today some of the betting markets start to slowly approach 70% probability for President Trump as the front-runner candidate in this presidency, which I think is appropriate.
And there's that image that we're seeing now. Again, something, as you say, that will live on in history as capturing this moment. If you think about historical corollaries, 1981, Reagan's attempted assassination obviously comes to the fore. It was fascinating. His daughter writing an opinion piece in the New York Times yesterday saying that after that assassination attempt, it really ingrained in Reagan that he was kept alive by God with a mission. And that mission was to end the Cold War. And she says that we wouldn't have had that moment with Gorbachev if it were not for this. What does this do? I know it's early in this, but what does this do to Trump policies? Does it fuel them, or does it cause a sense of moderation?
No, I'm not sure that it's going to cause a sense of moderation, but what moderation means may be different for sort of the establishment or the consensus versus his own followers. So I do think that his message has been very interesting. I mean, it's been about unity. It hasn't been about rage. It hasn't been about fear. So that's the first thing I would say. And I think that a lot of critics of President Trump have missed some of the signs, some of the hints that he has been actually giving over the past couple of months. That his policies are not so, tied to his first term. And I see, for example, in your introduction, you were pointing out to the U.S. dollar. I'm not sure that President Trump will wage the same type of a trade war that he did in 2008, as an example. And there have been hints that that will be the case this time around as well. So I'm not sure that the probability of a dollar appreciation is as clear as many in the markets see.
Well, one thing that you've been pointing out for a long time now, Marko, is the bond market reaction. You've called it a bond market riot, one that sort of pushes back on high deficit spending. But we've learned time and time again that this market is quite bad, as I'm sure you know, considering this is your work, at pricing in geopolitical events when they happen. You think of Ukraine, that was quickly priced out. The French election, the worst of that, we've backed off on. So why is this time different? Why is this a bond market that's currently complacent to the risks that lay ahead for an increasing probability of a Trump victory?
Well, first of all, I would agree with you. The market has been extremely poor at pricing in probably the correct probability of President Trump's winning the election. I think there's been a lot of complacency. I think it's probably because many in the establishment have thought that his various problems in the courts were going to, be a problem for the Trump candidacy. And as such, the probability of Trump winning has been very low, allowing the bond market to really focus on macro fundamentals, which are undoubtedly bullish for bonds, especially on the duration side. However, President Trump, if we know anything about him, is that he does want to generate nominal GDP growth, to put it very, very simply. That is something that was a hallmark of his first term. I think it will be a hallmark of his second term. As such, I think the bond market at 6.5% budget deficit, at levels of growth and inflation that are much different from 2016 and 17, will react negatively. And I mean, at the end of the day, the bond market also reacted negatively in 2016. None of us really cared about that. We were at 1.6% 10-year yield ahead of president's election. And then we basically went from that point to about 2.6% over the course of the next several months. So at the time, bonds and equities were negatively correlated. And so it was positive for stocks that President Trump was coming in and bringing growth and inflation to the table. In 2024, we're in a different macro context. And we're in a macro context where we don't really need any more growth or inflation. And so the real question is not whether bond markets will react negatively to President Trump, but by how much, and will that impact stocks?
Marko, I mean, again, you've been really excellent on this throughout the entirety of this election cycle. But after the events of Saturday, how did the questioning change and tone change from your clients who are inquiring about this research you've been doing? I mean, is there a more palpable sense of people are ready to actually take to heart this message you've been giving?
Yes, I think so, for sure. I mean, now a lot of people who were on the fence and who were asking questions like, who is Biden's replacement? You know, why do you ask a question of who is Biden's replacement? You ask it because you assume that President Trump is not that good of a candidate, and merely replacing the sitting president with an alternative would produce an outcome where the Democrats retain the White House. So that was the number one question, Danny, I can tell you, over the past 3 months, whether I'm on the road in Switzerland or whether I'm on the road somewhere in Asia, it's always been like, oh, who are the Democrats going to put instead of Biden? That's now changed. And now the questions are, okay, now that the Trump probability is truly rising, what does that mean for the market? And that's why I think the next couple of days of trading are going to be very important. If you're thinking about asset allocation in 2025, this will be a window into the market reaction to the Trump presidency. And so I do think we need to pay attention to the upcoming week, more so than probably any other week, trading week this entire year.
Marko, incredibly insightful. Thank you so much for joining us this morning. You're one of the best. Marko Papic of BCA Research. Okay, let's get to some of the other top stories that are trending on the terminal this morning. Burberry is replacing its CEO with Joshua Schulman, a former CEO of Michael Kors and Jimmy Choo. A slowdown in luxury has hit the designer's push to challenge other high-end labels. Stock prices had nearly halved since the former chief took over less than 2.5 years ago. China's economy grew at its worst pace in 5 quarters. Efforts to boost consumer spending have fallen short, and that's brought the pressure on Beijing to lift confidence at an important policy meeting between 400 of China's top officials this week. Now, that slowdown in China has led to a 70% plunge in operating profit for the watchmaker Swatch. The group, whose brands include Omega, reported a 14% drop in sales due to the downturn in Chinese luxury demand. Okay, coming up, Alphabet is said to be in talks for what could be its biggest acquisition yet. We're also going to bring you more of the politics and society implications of this weekend. That's next here on Bloomberg. It is your Bloomberg Brief. I'm Danny Berger. Time now for your front page news. A look at what's making headlines across the world. And let's be clear, you will be hard-pressed to find a paper this morning that does not have headlining the assassination attempt on Trump. Some of it is really trying to move beyond what happened on Saturday and what it means for America, as well as the gunman's motive. New York Times leading with this, that the 20-year-old suspect, the gunner, had little social media presence, had left few clues. He appeared to be acting alone, registered as a Republican, but also donated $15 to the group allied with Democrats. And these really are the images that are on every single front page. Donald Trump defiant, fist in the air with blood coming from his ear. Okay, beyond that, there are some other front page stories. On the Journal, they have this as one of their leads: China's hidden debt. China's off-the-book debt estimated somewhere between $7 and $11 trillion. That is twice the size of China's central government debt. There's also $800 billion is at high risk of default. That's according to economists. Away from the politics, away from the shock of America, of politics in America, it is also sports that's having the front pages. One that is near and dear to me and quite sad over the weekend on Sunday in European football. Spanish teamwork exposed the lack of England's coordination in the latest Euro 2024 match. Spain won the Euros. This is the third time in the last 5 tournaments. They were led by young talents, Nico Williams and Lamine Yamal. Only 16, I think about to turn 17 years old. They did prove to be the better team on the night, winning ultimately 2-1 with a late in the game score. Okay, later today, we're going to get Goldman Sachs earnings. That hits the tape this morning. Just a quick check on them before that report. 7:30 a.m. is when you have to look forward to that. Up by 0.2%. Investment banking has been outperforming, but this market has been punishing any sign that they're not living up to expectations. From our global headquarters in New York, I'm Danny Berger. Managed Cranny is off this week. Let's set your agenda. Seizing the moment, Donald Trump's defiant display after an assassination attempt boosts his odds in the election race, while President Biden attempts to stay above the fray and calls for unity. The Trump trade gains momentum. The dollar edges up, Treasury slump as the curve steepens. And bank earnings continue with Goldman Sachs on deck after its peers failed to impress with their results. Now, of utmost importance is the impact on society, on politics, and the loss of life. But we have to check the markets here, and we have to talk about this market implication. We were speaking with Marko Papic of BCA Research, who said this week will be illuminating. It is the one to pay attention to if you want to understand how this market will react to a Trump presidency, because the bottom line is clear that this increases the odds of that. It is a steepener trade. That is loud and clear. 10-year yield up by 2 basis points, 4.2%. The curve steepens. 30-year yield briefly goes above 2, as you can see on the bottom of your screen, still inverted, but only by about 60 basis points this morning. Euro versus the dollar, little change. Marko also pushed back up against the idea that this is dollar positive, because this time around it is a different economic environment that pro-growth trades might go into. Meanwhile, S&P 500 futures still having that rotationary flavor to it, up less than 0.5%. But Russell 2000 futures up more than 1.25%, or just under 1.25%. Again, that is the trade we saw on Thursday after the CPI report, and that continues with some force. We go to our top story. President Biden trying to rise above as the assassination attempt on former President Trump has dominated the conversation around this election cycle.
A former president was shot, an American citizen killed, while simply exercising his freedom to support the candidate of his choosing. We cannot, we must not go down this road in America. We've traveled before throughout our history. Violence has never been the answer.
Now, global leaders have also joined President Biden in condemning the violence. Let's bring in Bloomberg Digital Weekend editor Bobby Ghosh for more. Bobby, I mean, it's an event of shock, and it's a lot of information to try to process and really try to understand the implication of it. But what's sort of ringing loud and true and clear to you as a result of this weekend?
Well, over the weekend, I was trying to keep an attention on the international reaction to this. And you can see that reaction from op-eds, from people commenting. So there's the shock of it, and obviously every world leader worth his salt has expressed horror and sympathy for the victims and for Donald Trump. But there's this peculiarly American thing about this. We are a deeply divided, polarized political culture. That's not unique. Lots of countries around the world have this. There's a lot of violent rhetoric, threats made in our political rhetoric. That also is not unique. Fewer numbers of other countries, but it does happen elsewhere. But the one thing that makes us uniquely American is this pervasive culture of gun violence, the accessibility to a 20-year-old kid of weapons grade, I mean military grade weapons, and the ability to do something like this. That is so in the Venn diagram of these three circles, that's where people would immediately focus, that this can only happen in America. We can have violent rhetoric and polarized politics elsewhere, but someone taking a potshot at a former president, a leading candidate for the next presidency, that is something that feels, or to a lot of commentators around the world, felt very American.
Bobby, I think that's such an important point because the rhetoric in America, again, maybe not abroad, you see twinges of it, of what you're talking about, but not really in America. It was, how did Secret Service allow this to happen? How did this happen? But you make a really important point that maybe this misses something. That really the important question is, how did we get here, where someone can access a gun and have this sort of impact? But with that, Bobby, I mean, does there seem the political appetite this time around for there to be taken action on that?
Well, in this country, I suspect not. After all, this is a country where we've taken into the stride, our national stride, the deep horror of children being slaughtered with guns by other children. Once you've crossed that hump, I struggle to imagine a situation where one event is going to turn around national opinion, or not opinion so much as the will of our political class to make the important changes that need to be made. So I would be skeptical. It would be wonderful if that were the case, but I don't think that's what's going to happen here. Instead, what you're going to see is more heated rhetoric. And we've already seen, again, over the weekend, I was looking at, unfortunately, we have to in our jobs, social media, the calls for violence, the finger pointing, the sort of knee-jerk reaction and anger that we saw. If anything, the volume is going to be turned up rather than down.
In history, though, we have seen these sorts of political shocks act as a catalyzing force. But I guess the question is where are we in that? Because you think about the late 60s. It starts with MLK's assassination, Bobby Kennedy, the Kent shootings, George Wallace. I mean, it's this moment that kind of grew up and it resulted in boring politics. And Carter versus Ford, eventually you get to that place. So are you saying we're kind of at the start of this cycle where political violence is sort of almost in a nascent part of its time?
Well, it's hard, if you look at the evidence, it's hard to disregard that possibility. You know, Nancy Pelosi's husband was attacked in his home, not with a gun, with a hammer, but no less horrific for that. We've had a sitting congresswoman shot and nearly killed. You know, there is political violence already in our culture. It does not necessarily always rise to the level of a politician, of a sitting candidate or a sitting member of a house or a candidate, but that's what's now happened. Violence at just a level lower than that between individuals within the political space. We see that happening all the time. There are always stories in the papers about a political disagreement gone horribly wrong in a bar or in somebody's home, and a gun is brandished. Hopefully not fired, but sometimes that too. So we have to reckon with the fact that this is already a pretty violent culture, and that the pervasiveness of weapons makes it a permanent tinderbox. There's always the risk of a match being lit.
Look, this is a really important thread, but the other one that has come out from this is, bottom line, it increases the odds of a Trump presidency. That this is what that means. But again, contrast that with sort of the volatility of what you're talking about at this point. The time of we don't know what's going to happen, that there's calls for violence on social media. Approaching today and trying to understand how I should incorporate that into my market view. What do these two things tug at each other? How do they result? Well,
so that's the cognitive dissonance. On the one side, you have the shock and horror. On the other side, you know, investors are required to take cold-blooded decisions. That's their job, and you know that's what they do. They go where the data takes them. And as you said in your previous segment, the Trump trade worldwide suggests that investors believe that not only will Trump regain the presidency, but his coattails now might be big enough to bring his party to majorities, possibly even in both houses in Washington, which means that you might have a strong Republican majority and a Republican president. Now, what does that mean for investors? That means lower taxes, higher tariffs. It means less regulation. So anybody who's making investment bets along those lines is going to feel like this is the time to double down on those investment decisions. So on the one hand, you can be horrified by the events of the weekend. On the other hand, you can, and in some cases you must, make cold calculations about what that means for your investment portfolio.
Yeah, it's the job. Bobby, thank you so much. That is Bobby Ghosh of Bloomberg. Joining us now is Tim Graf, head of EMEA macro strategy of State Street. Tim, just to left off what we were talking about Bobby with, I know it feels cold and dispassionate at times after a moment of shock to try to understand what it means for the markets, but I'm just curious, what kind of questions have you been getting over the weekend and this morning as a result of what happened on Saturday? What do people want to hear from you and clients? Is it a moment of, how do I put on this trade, or are we not there yet?
I think it's a question of what probabilities have changed and what that means for markets. That was the first question I was asked this morning in our morning meeting. My answer to it was it probably hasn't changed that much because I think the market was already pricing in a high probability of a Trump victory anyway. And so I think even though you're seeing the market moves as they are and as you've described them, they're relatively muted. This is not a discontinuous repricing of markets. And again, let's reiterate, that's a very kind of calculating thing to say, but nevertheless, that is the reality, is this is a fairly benign reaction to a completely horrific event.
Yes, exactly. And Tim, to that point, unfortunately, there's been a lot of horrific events over the past few years, and it is a market that has taken them in stride. You think about the war in Ukraine. At first, there was a reaction. We back off of it. And then at the same time, you have the chaos in politics of France. Again, different than what we're seeing. It is not violent politics, but it is definitely confusion and concern nonetheless, and is a market that trades it and then backs off. What do you make of that? And is this another moment where the same thing will happen, that maybe we put on steepeners, but then we back off with a market that has a hard time really incorporating these types of volatilic views of politics into its outlook?
Yeah, and actually the context I would look at is the reaction to the presidential debate a few weeks ago, where you had the exact same views being put on to an even more extreme degree. Bear steepeners, Bitcoin rallying, the dollar rallying, just generally higher rates in the US. And you've completely reversed that. And that only happened, really, a lot of it happened last week in the wake of inflation data and a sense that the US economy is slowing. And I think that brings to mind, when it comes to thinking about the future now, context is everything. We know that Trump's main policy proposals are, all other things equal, inflationary, whether that's tariffs or whether that's fiscal policy. The attempts to maybe curtail immigration, all speaks to a higher inflation environment. But context matters. This is not 2016 to 2019, where you could slap tariffs on an economy that was humming along, doing very well, equity markets doing very well. We have equity markets now doing very well, but you have a strong sense that the US economy is actually starting to slow and potentially slow meaningfully. Does that mean the policies that are put forward as potential Trump policy initiatives have the same potential of getting to reality? And I think the answer is quite different now. Then you could potentially get away with tariffs across the board. Now, as much as the rhetoric is that that's what is desired, the context may not allow for that.
Tim, I mean, to that point, you put it so well, the push and pull of this market of, do I care about politics? Do I care about slowing growth? So if those Trump trades can't be put on the same way, those policies can't be put on the same way as the first round of Trump 1.0, do you see mispricing in this market then? And on a reaction like this, where the curve starts to steepen, where dollar maybe starts to strengthen, is there a mismatch between how things will actually play out in an initial market knee-jerk reaction?
Yeah, I think there's the potential for the perceived truth of what this means to actually be challenged. And your previous guest, Marko Papic, I think put it well with respect to the dollar. On the surface, this should be a good environment for the dollar. But again, context matters. The U.S. is heading into slowing growth environment potentially, with the Fed almost certainly to ease by the end of this year, it now seems. They have the runway to do that. That's a very different view for the dollar. The dollar tends to weaken as you get Fed easing cycles priced in. I think that's the other thing we have to keep in mind where a lot of these trades are concerned. You may see a steeper curve, and in fact, I suspect you will. But it may be a bullish steepener as opposed to a bearish steepener, because I think the notion of tax cuts from a second Trump administration, that has to be in the price by now, because if he's the favored candidate, it's also quite likely that the Republicans sweep Congress, and that just makes it a clear runway for those tax cuts to take place. And that should happen likely, and there's no obstacle to that happening. The rest of it, I think, is more questionable because the growth environment is also a little bit challenged. Do you slap tariffs on in that environment? Maybe not.
Tim, I got to be honest, there's probably a lot of people waking up this morning with that sort of phrase in their head of, America is the, most clean, dirty shirt in the laundry, and that's why we like America, and that's of the American exceptionalism. If you start to talk about weakening growth, you throw into that political violence and volatility. There's still 4 months to go of this race where there's so much uncertainty, not just of what happened on Saturday, but of Biden and a potential replacement. Does that American exceptionalism narrative get harder to grab onto?
I think it's one that's pretty well understood at this point, and it was one that formulated around the very real divergence between U.S. growth and U.S. growth expectations, more importantly, versus the rest of the world. And it was legitimate, and it came to fruition. And now I think it's just a question of, at the margin, does the U.S. growth outlook, inflation outlook, labor market outlook look as healthy relative to elsewhere? And I think no matter what your political views, but just abstracting from that, you have to think, given the panel of data we've seen over the last month to 6 weeks, it is getting at the margin a little weaker. And that does dent that American exceptionalism story, even if the U.S. is still the cleanest dirty shirt.
Tim, thank you so much for that, giving us the context that matters. Timothy Graf of State Street. This is your Bloomberg Brief. Big bank earnings season rolls on. It's Goldman Sachs reporting before the market opened today. Then Morgan Stanley, Bank of America all report on Tuesday. This comes after JP Morgan, Citi, and Wells all saw their rallies get a brake check. Investors perhaps underwhelmed by the results of last week. For more, let's bring in Saul Martinez, Senior Financials Analyst at HSBC. He has a buy rating with a price target of $493 for Goldman Sachs. Saul, fantastic to speak with you. A great morning to do so. As I mentioned, you get these banks report results, JP Morgan, Citi, Wells among them, but specifically with the investment bank, you see blockbuster results, record profits for JP Morgan, yet shares trade down. So how high is the bar for Goldman this morning?
Hi, no, thanks for having me. Look, I do think it is somewhat high. I mean, we do like Goldman, but Goldman stock has rallied quite a bit. And I think the expectations are that this quarter will be strong. Now, having said that, I think with Goldman, the positive narrative, and this is something we published, the positive narrative I do think gets reinforced by these results. When you look at JP Morgan and Citi's results, they outperformed high expectations in investment banking. Citi IB revenues were up 63%, I believe, and JP Morgan's were up 50%. And it was pretty broad-based strength. So I do think that bodes well for Goldman and Morgan Stanley in terms of the rest of the banking results. I think their sales and trading results, should benefit from the market conditions in the second quarter. Again, you saw pretty good results there from Citi and JP Morgan. So I do think the results sort of reinforce that positive narrative that you are going to see improved investment banking outlook over time. And also the other part of the Goldman results that we're focused on are in the asset and wealth management business. They are, reconfiguring the asset and wealth management business so that it is less balance sheet heavy, so they're not using their balance sheet as much, and they're generating third-party funds and raising assets, including alternative assets. And that's in order to drive revenues higher. So looking at the asset under management growth, looking at how well they did in fundraising will be also an important thing we look at. But generally speaking, we do have a positive view into the quarter, but we do acknowledge that the stock has rallied quite a bit into the print as well.
Well, to that point of alternative assets, Saul, I mean, the fundraising figures have kind of been insane. I mean, you look at private debt, what is it, 20 billion that they raised? I mean, really, really giant funds for businesses that, okay, they might have existed on balance sheet before, but otherwise are new to the business of raising outside capital. How sustainable are these kinds of figures? And is it sort of the next leg of growth of profit driver within Goldman and perhaps others?
Well, I think in terms of raising funds, can they sustain the kind of fundraising growth that they've had over the last few years? That I don't know. They've raised $265 billion of alternatives since 2019. Their goal was to raise $225 billion by 2024, so they're well ahead of that. But they haven't deployed a lot of those funds. So there is still a tail in terms of that being able to help them generate greater fees. They're at roughly $2 billion or so of annual fees and from management fees from alternatives. That should still grow. And remember, alternatives have a higher fee structure. The fee rates are higher than other types of assets. So as they deploy these funds, the alternative assets that they raise, it is a tailwind, I think, for them to continue to grow management fees and continue to grow the revenues in the asset and wealth management business. And to the extent that they can do that, that is very beneficial for them because this is a more recurring stream of revenues and generally tends to get a higher multiple.
So the other thing that we learned from the results on Friday were banks that said, look, these results are really good and it's going to be hard to do it again in the second quarter. Is this an inflection point?
Yeah, I mean, I think you do have to look at the differences, though, between JP Morgan, Citi, and Wells, obviously, and Goldman Sachs. Those banks are more traditional banks. They're diversified, but the net interest income dynamics are really important to those banks. And I think there is some optimism, which we share, that net interest income, which has been under some pressure, will inflect in the second half of the year. And Wells Fargo particularly sort of threw a little bit of cold water on that view. And I also think the message from JP Morgan more broadly was that we are over, that the narrative of over earning on net interest income remains. Now, Goldman isn't a traditional bank, but I do think it is fair that the very strong investment banking and market results of the first half, if you look at the second half, well, can they sustain that? That is a little bit trickier. You do have the political uncertainty that you have talked about all morning. You have a very strong base in the first half. You have debt capital markets, which are really strong and help drive a lot of the growth. A lot of deals maybe were pulled forward into the first half. So can you sustain in the second half the run rate that you had in the first half? That is a little bit more challenging. But if you zoom out and you look at investment banking over a multi-year period, there's still a lot of reasons to be optimistic. Equities and advisory are still running below historical trends. You have obviously the potential for rate cuts, which is generally beneficial for markets activities, and financial sponsors who have an incentive to get deals done. So you look at third quarter, fourth quarter, maybe you question whether the run rates in investment banking on the second quarter could be sustained. But if you look out, and you look out over a couple of years, there are a lot of reasons to be optimistic that investment banking over a multi-year period will do well.
So we're going to have to leave it there, about an hour and a half away from Goldman Sachs earnings. Saul Martinez of HSBC, thanks so much. Okay, coming up, we're going to set you up for the busy earnings week ahead. As we were talking about bank earnings, we're also going to get remarks from Chair Powell. We'll lay that all up for you. Let's get you set up for your trading day on this Monday and for the rest of the week. We're going to have more bank earnings. Goldman Sachs before the bell this morning. Morgan Stanley, Bank of America, they report on Tuesday. Fed Chair Powell will sit down for an interview with David Rubenstein. That's at 12:30 p.m. today at the Economic Club of Washington. And this really has become the main event after this weekend's events. It is the Republican National Convention in Milwaukee. It kicks off today. It goes on throughout Thursday. Okay, quickly, let's just whip through some of your micro movers. Apple, India sales surged 33% to a record, continuing to challenge Android's dominance in the country. But again, the politics is of utmost importance Monday in America.